Okay, beautiful stuff. All right, I trust everybody can hear me. I trust everybody can see me. We did have a little bit of a system crash a little bit earlier. So if we go blank, we will restart the stream. We'll resend that link. So guys, listen, first and foremost, welcome from wherever in the world you are joining us from. This afternoon's session is really to break down what is the CPI, what are the numbers, what are the forecasts, and what could we expect depending on what certain numbers come out as. So let's jump into it. First big question, what is the CPI? So we've covered this in a ton of different sessions in the past. You can jump into our YouTube channel, hit the like and subscribe down below. There's a ton of content, live content, courses, academy, whatever you can think of, it's there. Jump into any of our previous sessions where we spoke about Powell or CPI or even NFP for that reason. And you go and jump in and just get a bit of history. But basically, and the reason why this is pretty important, and we're going to see some fairly big moves in the day to day, and the ripple effects are so important for us as traders, is the data that we're about to receive is kind of that tipping point, right? So just a quick rewind, right? So December, Powell said, hey, listen, we might keep these rates at a high. Now, when we talk about inflation, the Fed, the Federal Reserve, and Powell, the head of the Reserve, they've got a job to kind of curb inflation. Their number one goal and their mandate is price stability, and inflation threatens that, right? So COVID happened, they printed a bunch of money, they stimulated the economy through quantitative easing and just injecting money into the economy. That did some good for some time, but that causes inflation, right? Inflation is a bad thing over a period of time. Now, they dropped interest rates to make it credit easily accessible to everybody. Once that happened and they believed they were over the curve in terms of, you know, what the pandemic was causing, they started to rise and hike interest rates, right? Hiking interest rates makes credit less available, but more attractive to outside investors. So as they hiked interest rates, the US interest rates, the US dollar became extremely hot. And we saw that over, you know, the peak of the pandemic, the US dollar was dominating. Stock markets had the worst year ever from a performance perspective. So when the dollar goes up, Wall Street goes down, gold goes down, US 30, NASDAQ, all of that tumbles, right? Just a quick shout out to everybody that is in the house. Just welcome everybody. If you're new to our channel, if you're new to our live broadcast, just say you're new, share some love. Let us know where in the world you are joining us from. Just much love across the board. So December, Powell comes onto the scene and says, hey guys, listen, we've put all these things in place. We've hiked interest rates to a peak. We think it's now stable. We think we're going to leave it where it is. And the markets responded massively to that. Now, in the last Fed meeting, right, the last Fed meeting that happened last month, Powell came on board and said, hey, listen, it's unlikely there's going to be a March change, but there is still a plan for interest rate reductions this year, maybe 2 or 3 times. Now, this is obviously key because as soon as we start reducing interest rates, the dollar starts to lose a bunch of momentum, and then we start to see big bull movements on Wall Street, US 30, NASDAQ, Dow Jones, gold. All of these items will take opportunity of that really strong dollar kind of now tipping the scales. So the one thing the Fed has kept saying is that, listen, we have all these tools. We don't want to make the wrong decision too early. So we're waiting on the data to confirm. And the data that they're talking about is the CPI, consumer price inflation data that we're getting out today, right? So let me break it down for you. And it may seem complicated, but it's really not. It's just numbers. And economists, traders, Wall Street, smart money looks at this, not necessarily of what it does today. And we've discussed this in the past. Don't get caught up in the hype of, you know, people on Instagram saying, we're going to trade NFP, CPI, whatever the case may be. That's cool. That's great. But don't get caught up in the hype, right? Usually smart money is looking at what that data means today for the next 6 months, right? And I'll break it down for you. Just a quick shout out to everybody that is in the house. I can see Kopano is watching all the way. Let me just move that screen over from Kuruman. Welcome. I can see Gabaroni's in the house, Belville's in the house. Good morning, you beautiful humies. Afternoon, actually. So we changed to US hours, so this is our morning. Later on, it becomes afternoon. All right, so let's break it down. Not very complicated. So the whole world's going to be talking about that today. The data's due at 2:30. Right, so I'm going to prepare you for that. If you're part of Premium Plus, then obviously you're going to get that data delivered right to you, right? So if you're part of Premium Plus, you get access to premium signals, triple pips, you get access to copy my trades, a bunch of other things. And the links for that is down below, right? Where you'll see indice type signals and all those other things. Right, so let's move on. If you have a look at your economic calendar, I use ofteninvesting.com, great source. However, it's not organized. So for this purpose, I'm going to use the economic calendar from Daily FX just to break it down and give you guys a little bit more info, right? So we're going to have 2 readings today, 2 readings that are the most important, right? and they divide it between inflation, right? Normal consumer inflation, and then there's what's called core inflation. The only difference between the two is that core numbers remove volatile things such as food and energy, right? So core numbers, no food, no energy. Where normal inflation includes food, includes energy, it includes all the things that consumers spend their money on. When we talk about inflation, we just mean that $1 today buys less tomorrow with the same amount of money, right? Inflation basically deteriorates the value of a local currency, asset, commodity, etc. Okay, so let's quickly have a look at this. So when we talk about core inflation, and I hope this is big enough for everybody, I'll make it maybe one step bigger. Let's make it 2 steps bigger. That should be nice and big. So we talk about core inflation that strips food and energy. Now the expectation is that core inflation year on year, because they're looking at where we are right now to last year this time, is expected to come in 3.7%. So a slight decline off that 3.8. That's what economists are forecasting. Now I must also say, with a big pinch of salt, these oaks are not always right. Actually, more often than not, they're wrong, but it kind of steers the economy, right? So now these forecasts are what we use to see how the markets are going to react. So if there's a forecast for a lower figure, and I'll tell you what the lower figure means in terms of movement on the dollar, but if there's a forecast for a lower figure and the markets come in even lower than that, it causes a knee-jerk reaction, right? It's what we refer to as standard deviation. So the expectation is this: if it comes around that price, around that level, markets don't react. It kind of says that, hey, this was expected. Even if it's an increase or decrease, it's an expected increase and decrease. There's no knee-jerk reaction. When we see standard deviation, so a difference of a magnitude bigger or smaller, then we receive an impact. So how do we do this, right? So we look at core inflation, it's expected to come in at 3.7%. Now, if this number comes in higher, so if we get a 3.8, 3.9, what does this do? I'm going to tell you very, very simply. If this number comes in higher, 3.8, 3.9, that will cause an immediate spike on the dollar. Now, a spike on the dollar will mean that US 30 will sell, NASDAQ will sell, Dow Jones will sell, gold will sell quite heavily. And then everywhere where you have a dollar quote currency, so XAUUSD, that's gold, USD is the quote currency. Euro USD, USD is the quote currency. So everywhere there's a quote currency, if this number comes out higher, those end up selling off quite sharply. Again, provided there's a big enough deviation. Now, the difficulty is with this is that you can't just read one number, it comes out, you read it and say that's what it is, because you could have an event where the core inflation numbers go up, but inflation as a whole, including food and energy, that comes down, right? And that's what will cause a little bit of a mixed match in the markets. Now, core inflation is expected to rise by 0.2% year on year. Then we have the month-on-month data, right? And this is where we look at month-on-month, right? Inflation rates month-on-month, right? And that is where we will look at that number. It's expected to drop. Now, remember, this is March's data. It's a month old, right? It's only being reported now. So if that comes in slightly lower, right? That will be a good thing for all markets, excluding the dollar. So let's talk about what happens if it comes in lower. And this is why I say we're at this massive tipping point in the discussion of inflation, the value of the dollar, the value of stock markets across the board, right? There's a lot of excitement building because the Fed has given us that indication that interest rates will come down. They have to come down at some point, whether it's in May, next meeting. The next Fed meeting is the 1st of May. That's the next Fed meeting, interest rate decision. So if these numbers come down, what does that mean? So if we receive, as an example, if we have a look here at, let's see, core inflation, let me just get out of the way here. If you have a look at this core inflation number, right, if that comes down and inflation as a whole comes down, right, the year-on-year numbers or even the month-on-month numbers, this will cause a massive weakness on the dollar, but it is then further compounded, right? So if this comes down, we're going to see the bigger movements than if it goes up. If it goes up, we're going to see a knee-jerk reaction. There's going to be scalpers, essentially just selling off on, US 30, NASDAQ, those kind of things, gold. But if it goes down in numbers, right? If it comes down, I think I might have mixed that around earlier, but if it comes down, the significance there is that it gives the Fed enough data. They've been saying the whole time they're data driven. They're looking at the data to make these decisions. If it comes down, it gives the Fed all the ammo they need to say, hey, we're now ready for an interest rate reduction. And that is huge. Now, the ripple effect, and that's why I say smart money doesn't just trade today, but they're looking at the future. as we've discussed in the past, a lot of money is tied up into government-backed securities that are bolstered by these high interest rates. So the second we see that tipping scale of an interest rate reduction, we're going to see a massive outflow of money from government-backed securities, bonds, into riskier assets like the Wall Street, NASDAQ, US30, Dow Jones, etc. Right? So if it comes down, if inflation is indeed falling, if the Fed's tools are indeed working, and we see that reflected in the numbers, we then have a situation where it is compounded. We will see massive jumps, knee jerks on NASDAQ, US30, gold, but then smart money will then compound that, and we should start to see all-time highs across these instrument classes across the board. So myself and the team, we've been working fairly hard to try and look at what are those outcomes, what are those probabilities, right? So first up, we're looking at NASDAQ, right? Now, NASDAQ has had a fairly flat morning. We saw a little bit of a dip, and we're seeing a little bit of a pullback. This is NASDAQ on a 4-hour time frame. So we have quite a bit of distance in the event a lower than expected inflation number, quite a bit of distance. That weakening dollar will cause NASDAQ to move on. However, what we're looking for is a true break of structure, right? A true break of natural structure. Now, if you are with TDM, right, if you're with a different broker, your price will be different. If you're with a different broker, let me just say, go and research A book versus B book. You do not want to be with a hybrid B book broker whose only interest is in you losing money. You want to be in a true STP environment where there's zero conflict of interest between you and the broker. The broker wants to see you do well. They want to see you trade more. They want to see you grow. That's an STP broker. A book, B book, hybrid models, local businesses. I'm just saying, do your research. It's available in our academy for free. You can go and learn and have a bit of an understanding. Hit the subscribe button. Links are down below. You can jump into our community and learn more. But in any event, we want to see a true break of structure here, right? So US30 has got a bit of distance, about 800 odd pips towards the top of that structure. And then we're going to be looking very, very clearly at that. Now, if we see a higher than expected number and there's a knee-jerk sell-off, right, we will essentially open up some trades once we clear some of these volumes that are basically being caught, right? There's a range that US30 has been caught in for the better part, I would say, of this week. And ending last week, we've been stuck in this range. We've only just come out of this range last night. We're now kind of sitting above here. And this shows us that markets are anticipating some good results, right? Some lower than expected inflation readings. That's currently on NASDAQ. So we have some plans and some trades set up for above this level, and we have some plans and trades set up below this particular range, right? So stay tuned for that. If you are a Premium Plus member, if you are a Premium Signals member with either ourselves or any of our amazing partners throughout the country, then you will get this delivered straight to your inbox, as well as have access to copy my trades. You don't have to even worry about it. Now, looking at US30, very, very similar position. US30 is obviously sitting at this initial, sitting right at resistance. So that's going to be pretty easy to spot. This is a 4-hour time frame again. US30 is sitting right up against that resistance, the same range we just spoke about that NASDAQ has been caught in. That NASDAQ is actually out of that range, but US30 is still stuck in that range there. We saw a bit of a dip yesterday, a bit of a sell-off, and then a rebound back into that level. So if you were with us yesterday, we actually bought this rebound. That was actually the biggest trade of yesterday that went straight into copy my trade. So we caught that one nicely, but we're now stuck at this level. I did mention that we're looking for 1,800 pips from this trade. We certainly got it. Now, this next level is our big level that we obviously need to overcome. And if we see a spike above this level, that might clear some of these buy-side liquidity areas that we're obviously looking at. We have a major zone that price has just tapped into and ultimately rejected. So very, very interesting to see what happens there. However, the big money exists once we clear the secondary zone, right? So on a 4-hour time frame, we've capped out here multiple times. There's a bunch of sell-side liquidity right there, right from an approaching market. But should we clear it, that is where the buy side is obviously sitting. So we have some looks there. We've got trade ideas set up right about that area. We have some trade ideas set up here. We're a little bit less into a sell at this moment. It depends how big, if the US30 inflation numbers or if the US inflation numbers come out higher than expected. We obviously be quite cautious at a sell. We don't want to be caught in any sort of whipsaw. As you guys have seen from most of these big news events, and that's why it really doesn't work for people to trade just the numbers alone. You have to have a plan in place. You've got to have a strategy in place. Often you'll see the data comes out, markets move and completely reverse and then continue in the opposite direction, inverse of the numbers. So that's why you need to really have a plan. Market structures need to break, confirmations need to be had before we take that. Now, obviously, we're going to be quite cautious with this as well. Looking at gold, right? Gold is quite well positioned. We took a sell on gold this morning on Copy. If you're part of Copy My Trades, you would have been part of that massive sell. We sold at around the 23.54 level, and we moved down for about 80 pips total. And we closed up once we'd reached that 80 pips. We found that floor there. So gold is quite well positioned, sitting on support. Gold is perfectly positioned for a rally. So should we receive lower than expected inflation readings, you can absolutely guarantee that gold will really start to take off. We will definitely break some all-time highs here. Our all-time high at the moment is currently sitting at $2,365 per ounce of gold. So if we break that, then we're obviously to the moon, right? And that is on gold 15-minute time frame. Now we're also on support here, which makes it quite easy because a break of support here would allow us to just essentially make sure that we break and we don't retest above any sort of structural levels here. And that would potentially bring us some selling opportunities. With gold, obviously, we have this immediate bull structure. We've kind of tinkered out of it. We haven't really retapped or retested that level. So it is possible that we could make a sharp retest this level much higher up. But for the time being, we are a little bit sideways here. So, this news, this data could be exactly what gold needs to fuel this next run. Whether it's a buy or sell, it doesn't matter. And, that's why we are impartial. A lot of people say, hey, predict. Is it a buy or is it a sell? It's not about predicting. It's not about a glass ball. Anybody who tries to predict these moves or guess, that's what they're doing. They're guessing, right? It lies in the data. It lies in the markets themselves. It lies in how the markets interpret the data, how big smart money looks at this data. And all we're doing, you've heard about the trend is your friend, and that's for a reason. You're not aiming to beat the market. You're aiming to trade with the market. You're aiming to have a look at that outlook and see where the market's clearly wanting to go and riding that wave of the market. So if you're part of Premium Plus, you're part of Premium Signals through any of our partners. We've onboarded some really amazing partners across the country in partnership, obviously, with TDM. And if you're part of those groups, then obviously you'll get that delivered straight to your phone. And there's also Copy My Trade. So reach out to whoever involved you. Reach out to them, whether it's Anthony, whether it's Vaynant, whether it's any of the amazing people we have in our teams. Reach out to them. They'll help you set up your Copy My Trades. And you can have this all done from the comfort of just sitting and watching. So there's going to be big movements. We're obviously expectant of that. The team is well aware and locked in, waiting to pounce. Again, we're going to look at the data. The data is super strong, super clear. We may execute. We may also wait for the data to present itself. If it's, let's say, choppy, right, we'll allow the data to present itself, allow the market to wipe out a bunch of traders, wipe out a bunch of liquidity, and then once the true move is revealed itself, we may then take it. Disclaimer, that might only happen on New York Stock Exchange Open, which is about an hour and 12 minutes from now, right? So we sometimes wait for the New York Stock Exchange to open, inject that additional volume. That volume gives us clear direction so we can ride the wave with the majority of the market. Okay, so as always with events like this, trade safe. There's no force, there's no hassle to be involved. In most cases, people are more profitable on days without news. News just adds a bunch of volatility, things that can go wrong. So if it's your first time trading or you're just getting into trading, sit back, watch the data, draw little levels of where you think you would have taken a trade if you want to learn. And for learning purposes, that is excellent. And sit back and learn, right? If you are an experienced trader, as always, as I say, risk management is key, right? Try and risk on days like this less. Risk 2%, 1% of your account with at least a 3 to 6 reward to risk ratio, and you are set and you are ready to go. So guys, we appreciate you. I just wanted to get you guys briefed, make sure you know what's needed, you know what's happening. Investing.com can be a good source. However, it's kind of scattered there. And remember, don't take the first piece of data that comes out. Also, disclaimer, when that data comes out, you may see that some of the data comes through immediately and some takes some time to populate. Sometimes you have to refresh the whole thing, and that just causes a whole other bunch of drama, right? So don't look at the first piece. That might be brilliant, might be good, might be giving you that direction. If you get a low reading, super low reading, we might think, wow, this is good for NASDAQ or US 30. And then later on, 2 minutes later, you get slapped by, a massively high number on the dollar as an example. So take it easy, take your time, trade safe, be safe. As always, we love you. We appreciate you. Thank you for joining us on this live broadcast. We will see you guys on the other side of your withdrawals. So appreciate you guys. Trade safe. And until we see you a little bit later, goodbye. Oh, and hit subscribe. So whenever we live on a free public environment, you get notified. You get told it's absolutely free. hit the notification button, get notified so that you are sorted. We appreciate you. We love you. Trade safe, and we'll see you later. Goodbye.